Hello, Jim here. I've been trading options for a number of years and I've been able to make some really good consistent income. Recently, I've been making over 8,000 on a monthly basis. Today, I'm going to share with you how I'm able to do that in both up and down markets. I'm going to talk about my strategies, why picking the right companies is so key. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. Now, the most important part of trading options or just being an investor is picking the right companies at the right price. I like companies that have really good fundamentals, have a really good ROE, like over 30. Also have a very low debt to equity ratio. I really like companies that have no debt, but if they have a debt to equity ratio that's below like 0.5, but the lower the better. I also like companies that pay dividends, grow those dividends, and also have a low payout ratio. So if they're paying a dividend, they're not paying a huge amount. I also like buybacks. I like companies who are buying back shares. So those are just a few of the fundamentals. Technicals, I like to look at the Bollinger Band. I prefer to trade towards the bottom of the Bollinger Band. So if those things pair nicely, you find a good stock, you like the price. I also want to be sure it's not overpriced. Maybe a great stock, but it may be way too pricey. Companies like Palantir and even AMD right now with the recent run up, it's gotten a bit pricey. So I like companies that are not way overpriced. In a way, I prefer them to be bargains. And once you've identified that, you've identified the stock, it's at a good price, you know what price you want to own it at, you kind of know where you want to go from there. And the next step is the strategy. I like vertical put credit spreads. If it's an inexpensive stock, then I might do a cash secured put. For instance, if it's under $15, then I'll probably look at doing a cash secured put. But for the more expensive stocks, like I like Google, I like Amazon, I'll do a vertical put credit spread. And the reason I like doing that is if the market crashes or has, a correction, then those long puts will become worth a lot more. So I could potentially sell them and lower my cost basis. I could also convert that vertical put credit spread into a cash secured put. So I could sell the longs, buy the short, and then sell the new long. So in a sense, I could bring in a lot more cash. And when you do that, you can typically move the strike quite a bit, maybe $10, $15. So pairing a great company at a great price with a great strategy, you've won a major portion of the battle. Then once you've done that, it's patience. A lot of times the stock or the price of the stock may move against you. You might want to jump out of it too quickly, take a loss. But I found that with a lot of the research I've done, unless that short strike, unless the stock price moves 10% below that strike price, it's typically not going to be early assigned. So if it moves around a bit, it hits that strike, just a bit of patience will allow it to kind of bump up. And then also being consistent, don't overtrade that position. Look at it. As you get closer to expiration, you might also find that it gets profitable very quickly. So if it gets, I like to close at around 70 or 80%. So if it gets 70 or 80% profitable, I'll look to close that position and potentially open a new position in that stock or ETF or a different stock or ETF. So, and that's really key, because if you're consistently picking out companies and making a similar trade and closing them early, just the nature of it, you'll be very, very profitable. I don't think I've had one vertical put credit spread go against me since April. So I'm probably well into the 90 percentile for my vertical put credit spread. So again, being consistent, being patient, letting the trade work itself out. Now, if it majorly goes against you, then again, you pick the right choice. You've decided why you want to own that stock and what price you want it at. So you're just getting a bargain, so allow the assignment to occur, unless something's changed and you don't want to own it anymore. But rarely, I've rarely find that is the issue. So I'll look to own it. I'll look to sell that long put. And the fact that it's maybe corrected quite a bit, it'll allow me to sell that long put and put the proceeds towards the purchase of those new shares or the assignment of those shares, which will give me a much lower cost basis. So over time, I do much better with that trade. And then I like to monitor my trades, usually at the end of the day, usually around 3:34, maybe a little bit earlier. I'll go through all my trades. I'll see if any of them are 60, 70% profitable. If they are, I'll look to see, can I close them for cheap? And if I can, I typically will. I've slowly been lowering the profitability I want to get when I close a position. So if it's 80 or 90% profitable, I'll definitely look to close it. Some cases, like I did an Iron Condor and IWM, and I closed it probably at 65 or 70%. So I'm slowly lowering that percentage of when you close, and definitely, closing the positions early and then putting that capital someplace else is really the best way to go. There's been a number of studies that have shown that. So next, let's talk about, sticking to a system. So I mentioned to my members to set goals, to track your trades, to have a process, get a process in place. So with my membership, I share what I call my planning worksheet. I also will encourage people to set goals. Even in my planning worksheet, there's an area for setting goals. And I monitor that. So my goals are 8,000 on a monthly basis, 2,000 on a weekly basis. Each day I try to do around 400 a day. So I may have some days that are 600, other days that are 200s. And my planning worksheet works out really well for that. Now, if you want to learn more about that, details will be in the description about my planning worksheet. New members will take it, they'll delete my trades, and they'll start setting their own goals and tracking their progress. And by tracking your progress, you can see, do you need to make small modifications? Do you need to go with higher deltas, lower deltas? Do you need to go with more contracts, fewer contracts? There's quite a bit there. At the end of this video, I'll go into a little bit more detail. I'll share with you what the planning worksheet looks like for October. But it can make a big difference. I started doing that from day one. I started with a goal of 1,000, then went to 1,500, then 2,000, and now I'm at 8,000, and I'm potentially going to look at doing 9,000 probably in January for 26. So it really does make a difference. I also have a section in that planning worksheet, which I call my guidelines. I talk about the deltas I like to use for both puts and calls. I like to talk about the expirations, how far out I like to go. There's quite a bit of detail there. So again, I know I just mentioned it a second ago. Take a look at the description if you want to learn more about my membership. I don't require long-term commitments. You can join and leave the next month, and I do have people that do join 1 month and leave the next. I've had a lot of members who have left and then come back. I have different levels. I have a basic level where you get access to everything. You get my trades right after I put them in. I'll add them to Patreon, then I'll add them to Discord. And then my Discord's gotten pretty active. I have a lot of members sharing trades themselves and people copying each other's trades. I had a member request last week to add a leap section, and I added that. So there's a lot of discussions about leaps, about crypto, about futures. So it's interesting, it's growing, and it also allows me to learn from my members. I have a lot of members who are probably better traders than I am, and then they're also into things I'm not in. Like, I'm not into futures, but I really enjoy watching it. I'm not really into 0DTE, but I do have members that are trading 0DTE that I'm learning, as they learn. So again, take a look. It may be worth your while. Next, we'll talk about what a trade setup would look like, what my typical trade that I like to make that has been so successful. And then I'll show you how I track the trades using my planning worksheet. So stay tuned. Let's jump into that next. Okay, first I want to jump into what my trade setup looks like. This is Schwab. I do like to use Schwab just because graphically or image-wise, it just looks better compared to using something like Thinkorswim. But here you can see it's a vertical put. It's Amazon. Amazon currently is up a little bit today. Its current price is $225. So I typically like to do a vertical put credit spread. I'll go out, between 30 and 60 days. Typically, I like to do monthly expirations versus weekly. What I typically do is I like to pick a 15 delta. So Amazon is a company I really like. They have really good growth. Here we can see the delta is really close to a 15 delta. It's I think it's a 16 delta, which is I tell people 15 delta is probably my favorite. It's expiring in 43 days, so that is okay. I typically, if they don't get assigned to me, I typically sell them, or not sell them, I close them early, usually 10, 15, 20 days early, maybe even a month early. I've recently sold, or not sold, I closed a few positions that were expiring in November 21st. I closed some of them early, so this is the strike I like. If I was looking to make the trade now, I currently have a trade in Amazon, but I would look at that strike. So the 200, so almost $25 below where it is right now. Then I like to go out $10. I like $10 spreads. It just keeps everything easy. You can see with this one, a lot of these they'll jump by like $5. So I could go 190 or 185. Now, if I did 185, I could try 185, 195. So take a little bit less risk. If you wanted to take less risk, then you would do 195, 185. This is for one contract. So I'm saying sell to open one contract in Amazon, expiring in November 21st at 195. And the bid is 201 and the ask is 204. So the fact that they're so close to one another is also really good. Means you probably can get that, you can sell that put at that price. It should be relatively easy to get it filled. Now to buy to open, again, I go usually $10 out. If I can go $1 at a time, sometimes I might do like a $9 or $8 or $7 spread because they can potentially be more profitable. And here's saying I would pay $1.06 through $1.08. So again, the bid, mid, and ask are $1 apart, which is really good. It means you can potentially, like I said before, get this purchase of this put filled fairly easily. So overall, the trade should be fairly easy to get filled. Now, for one contract, I can get between 92 and 98. I typically do two contracts. And then what I would do is I would typically try to get pretty near the 98. So I might even start at 98 and then I would review the order. I would place the order. And if it didn't go through, then I would maybe go down another dollar or two. So then I might do 97 or 96. And usually after the second or third time of replacing that order, it'll go through. Now, what happens is, in a lot of cases, probably more than 50% of the time, Amazon will continue to go up. And then as this gets closer to expiration, theta decay will increase. And then at some point, it'll become very profitable. If it's 60, 70% profitable, meaning I'm spending pretty close to $1, but say I could close it for $10 then, or $20, then it makes a lot of sense to close it. Mainly because this 225 or the current price of Amazon would probably be 235, 240, and the chance of it dropping this far in the week or two that it may have left before expiration, it doesn't really make sense to hold on to this trade or this position for another 2-3 weeks to only make $10 or $15. It makes sense to close it, get out of it, and then make a trade in the same company or a different company. A lot of times, if a position has become very profitable, it doesn't make sense to get back into it right away. But there may be another company, another, like maybe Google has dropped recently and I want to get into Google. So this is what I look at. This is the trade I like. Now, if it goes majorly against me, like when we had April, once it dropped below 185, I'm limited to $10, and this put will become worth more and more. So let's say we got a major correction and Amazon dropped to 165. This long put would be worth a lot, and my max loss would stay the spread minus the premium brought in. So for each contract, if we go back, it's $1,000 minus 93. So you're talking, what is that? Like 900 is your max loss. But again, if you wanted to own those shares, that long put would be worth a lot more. So you could sell it, and that's what I like to do. And then I put it towards the purchase of these shares, and then I end up owning Amazon, not for 195, but maybe 190, maybe 185. So that's how I set up the trade. And it's, like I said, it's worked out really well. And when you close them early, it's in the high 90% that these go through and rarely ever go against me. So next, let's jump into the tracking spreadsheet or the planning worksheet, and I'll show you how I use that. Okay, here's my planning worksheet. This is what I use every month. At the end of the month, I make a copy and remove last month's trades, and then I keep a running total. They're color coded. The green means it's a new trade. The blue is that I closed the position. Gray is that I rolled it. So you can see I've opened more positions than I closed, but I typically, the last 2 months, I've actually closed more than I opened. And towards the end of the month, you typically are able to close more. So if you're going out 40 to 60 days, what happens is at the end of the month, you're getting to that sweet spot for theta decay, and you're able to close a lot of these positions. So I won't go into each one of these, but I like to trade a lot of different positions. My biggest issue is a lot of what I've invested in is shot through the roof, and covered calls have gotten deep in the money. Like you can see here, the covered call right here is also in the money, but some of these others down here, like even Google and some of those, I have very few vertical put credit spreads that are in the money. I think Target might be the only one at this time. But I track this. I put the trade date. I'll put the initiation date. I'm not real good about doing that. I will put the delta so I can track, how the deltas are doing, how the trade did based on the delta. I will put the current price. I'll pull this from Excel. Excel has the ability to pull the stock price. Then if I roll, I put the new expiration, the new strikes. Then I have the different premium, the capital required, the yearly ROI based on the trade. And then up here at the very top, I've got my weekly goals. So I'm trying to make 8,000 on a monthly basis and then 2,000 weekly. So here you can see I'm at 34.49 in October, and I'm, what is it? It's only October 9th. So I'm a little bit ahead of the game. And then over here, I've got other stuff. I've got favorites. I update this for my community. These are the companies that I really like. I'll color code them, meaning I like Apple, but it's a bit pricey. I think Zoom is becoming more affordable. Same thing with PayPal. So I will update this every week. I send this updated planning worksheet out on Sundays to my membership. So I update this. I update it with the pricing, and I also color code things based on what the current price is. Then I have what I call my trade rankings. I try to look at if I made a bad trade, why I made that bad trade. Was it because they had too much debt? Or was it because management had some changes? I try to identify things, and this has worked out really well. I definitely have gotten better with picking companies. Then I have this checklist. This is some of the fundamentals I like to look at. And I go over this. I end up using Seeking Alpha most of the time, and just because it makes it really easy. You can see, well, for profitability, it's an A. For value, it's an A. For dividends, it's an A. It just makes it, in my mind, just simpler to work with. You can kind of eyeball it and get a feel for how the company's doing. Guidelines, this is probably one of the most important. sheet. So this is what I found has worked. So I have different deltas for puts and calls. I have different deltas for ETFs versus stocks. I have different, a lot of different guidelines. So I update this regularly. So every time the new planning worksheet comes out every Sunday, there'll probably be some changes to the guidelines. Probably on a monthly basis, I probably do a few changes. Then my goals. This is how I've done goal wise. So you can see I'm not anywhere near done with October, and I actually need to update October. But I've been able to consistently get over 8,000. Last time I got below 8,000 was back in March. And that was kind of leading up to the rough April and then January before that. But consistently, I've been able to get 8,000. I also identify how I want to do on dividends. So I keep everything in one place and it works out quite well. So that's what I wanted to show you guys. That's what I wanted to share. I really believe that tracking your trades and keeping a history and then, learning how you're doing compared to your goals. Some of my members prefer percentage goals. So they might say, well, I want to get 1% a month. I want to get 2% a month. I want to get 3% a month. I am doing that with my Roth account. I did a video recently where I'm trying to get 3% on a monthly basis in my Roth account. So I encourage you to do that. If you're not a member somewhere, set up your own spreadsheet and track your trades and just make adjustments to make your trades better. To me, I don't do radical changes. I just, slightly change the direction of the ship. Small modifications can have a huge impact over time. And being consistent, finding a trade that works for you and keep making it, keep working with it. Now, companies can change. Profitable companies can become unprofitable, can lose momentum, and the reverse can happen. A company with little momentum can suddenly be a big player, kind of like what we're seeing with AMD currently. So again, that's what I wanted to share with you guys. Let me know if you're doing something different or maybe something better. I always love to hear what people are doing out there. And as always, thanks for taking the time to watch the video, and I hope you have a wonderful rest of your day.